Hello, it's Tuesday, October 23rd, 2018. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell at Terrilco Company. We're going to talk a little bit about market and investing. And Joe, there's a little chill in the air. Of course, it's October, we expect that, but there's a chill in the markets as well. Even though third quarter earnings appear to be doing quite well, my trusty iPhone has just sent me a report from the Wall Street Journal that says the market's down 400 points this morning amid dismal earnings outlooks. What do you see as happening in the market today in October?
Steve, people are worried that higher interest rates, trade war, tariff costs are going to hurt future earnings. So as companies are reporting right now, the reports are great. They're making a lot of money and the earnings are just fine. It's the future that people are worried about. Depending upon which sectors of the market you're talking about, some of these investments have done nothing all year long, and now they're going down even more in price. And I put the bank stocks in this category. Going into October, they were down about 7.5% for the year. Now they're down 15 to 20%. Those are going to be excellent buys. Now, on the other hand, some of the high-flying NASDAQ stocks who have no earnings, no cash flow, I put a Netflix into that category. Amazon does, but prices are ridiculous. I still don't think those are buys. Those stocks could come down dramatically before they would be a buy. But right now you have an October panic going on, and that's what it is right now, a panic about maybe the future is going to be dismal. I'm not ready to agree with that thinking yet.
And you know, it's funny, there seems to be a little bit of a disconnect on how well the markets have been doing this year. The perception seems to be that, oh, it's just been doing gangbusters, but unless you got 100% of your assets in the FANG stocks, really it seems to be flat to down. And you know, you showed me some figures here. The Bloomberg Barclays bond index down 4.2%. We've got the Dow Transport down a little less than 0.5%. The S&P's only up 2.9% maybe. Dow Jones Industrial 2.1. There seems to be, all other stocks seem to be flat to down, and yet the word we heard for the first 9 months of this year is, oh, it's going gangbusters, and now we're in a panic in October.
That's very true, Steve. Up until the first part of October, most all investment asset categories have been flat to down. And the only place you could have gone to have a reasonable rate of return, which would have been not prudent for 95 to 98% of investors, is if you went and put 100% of all your money in very aggressive NASDAQ high-flying technology stocks. And that's the only place where there's been any money made this year. Now, with what's going on in the market during October, everything is down for the year. And I'm not sure why people, maybe because they heard on the news that Apple had become $1 trillion company, or they heard that the markets might be making new highs. Well, they started the year at almost these prices. So making a new all-time record high that they were threatening to do back in September doesn't mean they're up 2% can be a new high. But right now, it's a fascinating time to see this, and I think by the time October's over with, there'll be some real bargains out there for investors. that are willing to look past 3 months and look out 2 to 3 years.
What are some of those long-term stocks that you think people should start considering?
Well, no question, the bank stocks. These companies, the thinking is interest rates are going up,
Yeah.
the banks are going to have to pay more for deposits, the economy's not going to be good, therefore they won't be able to lend the money out, therefore they're going to get caught in a squeeze, their costs are going up and they can't put the money out on the street. The reason that thinking is wrong is if they can't lend the money out, they won't pay more for deposits. Banks in general are not going to fight each other for deposits unless they can lend the money at a very profitable rate. I don't think the world economy is falling apart, and I don't think the United States economy is falling apart. But let's assume maybe that it is, just for the sake of argument. And banks' loan demand really goes bad. If the loan demand goes bad, they'll cut the rates on the deposits and they won't care if they lose the deposits. They're not going to pay a high rate for deposits and sit there and watch profits disappear because they can't lend the money out. I think they will be able to lend the money. But anyway, banks, energy stocks, some of the manufacturers that are tied to the world economy. People believe, oh, the world economy is getting ready to really fail, therefore you don't want people that are doing business outside the United States. Some of the individual names are selling really at historical record low multiples of cash flow. So I would put them in there. I still like the pharmaceuticals and the biotech stocks. If you are worried about the economy, you're looking for a drug company with the theory that people get sick no matter what, and therefore these companies will continue to do the same amount of business, but yet they're running the price down of all of them, as this market really is about a lot of these funds that end their tax year, October 31st, are trying to come up with liquidity and trying to get through the end of the tax year, and therefore they're not buyers. Those that are sellers are having trouble. Plus, and you cannot underestimate what an effect this has, which is foreign accounts, foreign insurance companies, sovereign wealth funds, foreign pension plans, make up 70% or more of all the activity that goes on in the United States. As those funds look for liquidity, and we're looking for, some pretty big numbers here, there's no one to step in and be the buyer for those large sell orders when the mutual funds and hedge funds and such are closed down for the end of the tax year. So some of these things are technical in nature, but as you probably know, we've been, somewhat bearish on stocks and very cautious on stocks. If this continues, certainly with individual areas, we'll definitely turn much more bullish on some of these companies. The prices they've gone down during October, for the most part, is not justified.
Well, thanks, Joe. That's Joe Terrell, founder of Terrilco Company, independent wealth management with $740 million in discretionary assets under management. Joe, let's revisit in about a month or so around Thanksgiving. We'll be past the midterm elections and we'll still see if some volatility is in the market and take a look at maybe what we think is going to be moving forward.
Yeah, it's going to be fascinating to see. Steve,
I'll
thank
see you then.
Yeah, good to see you.
Take care.